Good day, crypto trader. Bitcoin price action is slowly but surely attempting to move north on price charts as traders attempt to continue and maintain the momentum that began on Monday morning. Bitcoin price action is balancing on the sharp end of the blade. Sadly, that winning streak ended on Wednesday near the US closing bell. A strong recovery in the final minutes erased most of the losses, but it was not strong enough to turn the red candle into a green candle for the day. As buyers and sellers attempt to position themselves for the subsequent leg up in the fourth quarter of the year, which may turn very bullish or yet again very bearish, this nervous price action demonstrates the imbalance in the price action. BTC price spins the bottle because bears and bulls are vying for influence over the trend. The price action of Bitcoin runs the risk of becoming unstable. There are those who support either scenario. On the one hand, there hasn't been much change in the tail risks right now, which probably means that there will be more bad news, especially if one of those factors gets worse. On the other hand, a lot has already been priced in, so any relief or even the fading of one tail risk should be enough to propel Bitcoin price action significantly higher. The BTC price is currently being rejected by the $20,444.54 55-day moving average, SMA, which serves as a moving cap on top and mutes any upward price movement. As bears increase the size of their short positions, there is a chance that price action will continue to fall. As long as Russia, North Korea, and Taiwan remain factors to monitor, this could see the BTC price fall to $19,036 or even $16,020. However, the bullish camp is gaining some traction due to the fact that many central bank moves to tighten have already been priced in. This could cause the US dollar to begin to retreat, allowing for some room for the BTC price to rise. The worst has been priced in by markets as they have become accustomed to the current monetary policy settings, and equity markets will begin to take the lead by rallying for several days. BTC's price could rise above the 55-day SMA and reach $21,969 or even $23,878 in the coming weeks if the scenario continues. Prediction for Litecoin's price: LTC stalls at a crucial threshold. The price of Litecoin is attempting to regain its footing after rising from $50.50, the support level, and reaching $55.72. The token would have been pushed out of a narrow range channel by this move north. The bear pennant pattern will be difficult for bulls to overcome, indicating that Litecoin has not yet recovered and that losses below $50.50 are possible. The price of Litecoin is getting ready for another drop. After bulls hit resistance at $56.72, a bearish pennant pattern started to form. It is important to note that pennants, like rectangles, are continuation patterns. In the case of the Litecoin price, the pennant gave sellers a chance to regroup before pushing for further downside action. Since the 50-day simple moving average, SMA, red, restricts upside movement, more sellers are likely to take advantage of the opportunity and bet on a prolonged down leg. The current position of the OBV, on balance volume, indicator indicates an ongoing decline in LTC's positive trading volume. At the same time, sellers' volume is rising, which may indicate that the bear pennant pattern breakout has occurred. The Into the Block IA map on-chain model indicates that sellers in the $54.72-56.21 range caused the price of Litecoin to decline. In the region, approximately 387 million addresses bought 5.94 million LTC tokens. Investors will likely close their positions as the price of Litecoin rises, resulting in overhead pressure. The next range, $56.21, $57.71, should anticipate additional resistance. Litecoin may invalidate the incoming bear breakout for a move higher, above $60, if buyers are successful in weakening the seller congestion zone. Short sellers probably still have positions they took when the market god indicator flashed a sell signal on September 18. In addition, the 50-day SMA may continue to exert downward pressure. South of LTC's market price, keep in mind the following important targets: $54.20, $50.50, and $46. Tezos, XTZ, price action dropped sharply to the downside after most of the gains from Monday and Tuesday were erased in a move to the downside. Tezos price action could still rally 8%, as XTZ price gets underpinned at $1.40. In the meantime, bulls showed up as buyers supported $1.40, pushing price action back up and away from the level. If equity markets take the lead and surge higher, Tezos price action could see a modest 8% gain by Friday. This would open the door to additional upside. Tezos price action has seen its efforts vanish by the US closing bell because the last-minute recovery was just too small to still eke out gains for the day. XTZ price in for a small rebound higher. However, there is a small silver lining in the fact that bulls caught the dip and turned the price action around, resulting in the price action becoming supported at $1.40. Back to today, if other asset classes follow suit, additional gains could be planned for this week. If the price of XTZ is able to rise above this week's high and reach $1.50, it could thus enjoy additional upside potential. That move would be seen as a strong bullish reaction, causing bears to back off a little bit and providing bulls with more room to push this rally further north. On the plus side, however, bulls won't be able to make more than 8% profit because the 55-day simple moving average, SMA, might fall in line with the monthly pivot. Nothing fundamentally has changed behind the scenes. The same big tail risks are still very much alive and only seem to be getting worse right now. There is a possibility that Russia will begin using nuclear weapons, that the Eurozone will run out of gas this winter, that China will at any time invade Taiwan, or that North Korea will launch a missile attack on mainland Japan. Given these tail risks, the market should anticipate smaller upticks and larger downticks. Ultimately, this will probably result in XTZ price action breaking below $1.40 and attempting to retest a downside target of $1.19. The Dogecoin price has been stuck between two barriers since August 28 and is forecast to rise by 35% according to on-chain metrics. Doge buyers are prepared to raise the upper limit, as evidenced by the recent attempt to do so. The price of Dogecoin has been hovering above the $0.058 support floor and below the $0.065 hurdle for approximately 40 days. A 13% upswing is currently struggling with and attempting to break through the upper limit after the last retest of the lower limit on October 3. Doge will be able to compete with the multi-year declining trend line if it successfully flips the $0.065 hurdle into a support level. A breakout will occur if there is strong bullish momentum and the Dogecoin price breaks through this barrier. Since Doge hasn't closed above this level on a weekly basis in more than 500 days, a weekly close above it will be significant. Investors can anticipate that the Dogecoin price will surpass the equal high of $0.089 and collect the buy stop liquidity above it as a result of the nature of this movement. This move would result in a total gain of 35% for the holders and is likely the location of a local top, depending on market conditions. The global in/out of the money, GIOM, model used by Into the Block supports this significant price increase for Dogecoin to $0.089. According to this on-chain metric, approximately 352,000 addresses have purchased 60.80 billion Doge at an average price of $0.088. As a result, investors trying to make a profit may increase selling pressure if this territory is entered. On the other hand, it will be a sign that buyers are not ready to make a move if the price of Dogecoin does not move past the downward trend line or the $0.065 barrier. Doge could experience a sell-off as a result of this development, sending the price back below the lower limit of $0.058. The bullish thesis for Doge will be invalidated if the daily candlestick closes below $0.057, which could lead to a retest of the demand zone between $0.049 and $0.057.